Hello, everyone. My name is Matthew Frailey, founder of BreakpointTrades.com. Founded it back in 2003 to provide you advanced technical analysis, market commentary, trade ideas, and sophisticated mechanical trading algorithms like our 21 mean reversion systems, which, by the way, did an awesome trade yesterday. It went long, sold today for a nice winner, and of course, our KISS Trend following systems. Now, as you know, I just did an extensive video yesterday after the market sell-off. I wasn't planning to do another YouTube video today, but given the reversal and just some educational things, I decided to do another video. So please pay attention because, again, these videos are also meant to be educational and teach you things about technical analysis. I've been doing this for 25 years and, try to share what I learned over that time. So anyway, this is the newsletter for it's February 1st. Let's go and get this back-end recording started for our standard web page format. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Thursday, February 1st newsletter. A quick update on Steve Nelson, who has COVID. He's feeling a bit better, taking it easy, and hopefully he'll be better by the weekend. We'll see, but he's doing a little bit better now. And anyway, this newsletter, as you can see, divided into 7 major sections. I'm going to make this a faster newsletter than last night. I'm going to try to get through things quickly. But as far as the market, again, as you know, huge volatility. First off, yesterday, after the 80-point down day, the rug pull in the market, the S&P staged a nice recovery today. Saw the S&P rebound over 60 points. So it didn't quite rebound that whole 80 points, but it did most of it. All right. Also, futures are up additionally in after hours. Big moves in earnings from Meta and Amazon. Apple earnings, last I looked at, the stock was down a little bit, but big moves in Meta and Amazon and some others, and futures are up. So big old recovery. One thing I did discuss yesterday, and this is one thing I'll be going over later in the newsletter, is that while the market sell-off yesterday was sharp and scary, I pointed out that symmetry had not been broken to the upside. In order to break an uptrend, you need to break symmetry and structure. Okay? Basically, you need to have a pullback that is the largest pullback in that uptrend, which began in October. And I said, as long as we didn't break symmetry, we could go back to highs. Plus, one of our preferred wave counts had this pullback. It favored as a wave 4, wave 4, and meaning that likely going to get a move up higher in a wave 5. Again, I'll go over that below once we get to it. Also, as you know, yesterday, one of our mean reversion systems went long, one of the high probability systems, the QE Momo. It went long on both the SPY and MES futures. Fantastic trades. It closed out today. I said it would be a quick trade. That system usually only holds for 2 or 3 days. Well, it held for 1 day, but it ended up being a very nice winner. It easily paid for a subscription or, subscription many times over, depending on the size you did. Okay, tomorrow, the big news item, of course, is the non-farm job payroll report. We'll see how the market reacts to that. And obviously, the KISS systems continue to kick butt. A couple of them stopped out yesterday. The S&P, as you know, and the Qs did not hit their STS stops. They remain in place. And let's go ahead and get started here. So first off, let's talk about these mean reversion systems. So yesterday I talked about that the QE Momo triggered a first entry long on both the SPY and ES futures. Now this shows ES. We actually trade MES, that's the micro contract, for March. But anyway, went long yesterday. Both of these closed out today. Yes, it's a very quick trade, but I said this particular subsystem tends to only hold for short periods of time. You can see some of the past trades there. It's not attempting to catch whole trends. Okay, it just looks for a statistical opportunity, gets in and gets out. Catching the whole trends, that's for the KISS systems. But again, nice trades here. Again, these systems had very nice profits, especially on the SPY QE, 81.5 profit factor. And these are from the previous stats. These would have bumped up just slightly with today's winner. But again, awesome trades, 90% winning trades, 94% winning trades on the ES side. So congrats to those of you who took this trade. Next, image number 3. So here's the trades, how they closed out. Now, unfortunately, I issued a half trade size. So stupid me, should have just did a regular size, followed the systems. But regardless, the MES would have closed out an 87-point gain for $435 on micro ES contracts. If you did just the regular E-mini, that'd have been $4,335. And for the SPY, it made about 125 bucks. So there you go. Nice trades. Again, so far, these are the mean reversion systems that have triggered this year. So on ES, we've had 4 trades. On SPY, we've had 3. Last year, we had around 30 or so trades for SPY and ES. In 2022, during that bear market, we had nearly 100. The mean reversion systems trigger a lot more often in bear markets and high volatility. But anyway, so far, starting off the year good here, as you can see. Again, just look at these gains. If you followed these modest size trades, you could have paid for the membership for years. Something to consider when considering a subscription. Next, image number 4. Again, remember, we have 21 mean reversion systems. That was just one of them, the QE Momo. You can see all the different ones here. You know, I'm just noticing I'm missing something here. You could see 11, 13. So there should be number 12 there. It should be QE Momo. I'll fix that after this video. Apologize for that. But again, it was just one of the mean reversion systems that triggered. Why do I have 21 mean reversion systems? That's in order to give us the most trade opportunity. You know, if I just had one of these systems or 2 of these systems, there are going to be a lot less trades. And I think most of you want more trade opportunities. That's also why I run the systems on both SPY and ES futures. Next, back to the KISS systems. Again, guys, if you're a subscriber, make sure to set your favorites. Go to the KISS section, go to the favorites tab. You got to click this box to receive alerts about your favorites. Otherwise, you're not going to receive alerts. And you obviously have to set some alerts. Click on the star to set the alerts, and you'll start receiving email notifications to your favorite stocks or ETFs that you want to follow with the KISS system. These are my favorites. You can see a couple stopped out yesterday, like Apple, but look, very nice gains on a lot of these still. CrowdStrike is still long with 23 smart trailing stops. Impressive. Next, image number 6. This is an example. Again, I showed this yesterday of what your emails will look like. You get a nice clean table with your favorites whenever there's a new change, such as a new smart trailing stop, such like that. So basically, you can just follow the systems. Whenever they enter, you can enter. Wherever they set their stop, you can set the stop. Whenever the stops change, you can adjust your stops. That's the whole point of it. Back to the general market newsletter. Here's the index sector table, what transpired today and this week. Again, huge recovery, as you can see. S&P up 1.25%, 60 points. NASDAQ up about 1.2 to 1.3%. Same for the Russell. The Dow is up about 1%. For the week now, the Dow and S&P are up while the NASDAQ is down. And as far as the 21 market sectors, the majority were up today, except for banks, which took it on the chin quite hard. Energy, which came off their lows, they were down just slightly, but everything else up. Currencies, US dollar, nice pullback today, down 0.5%. That, of course, helped some things, and the precious metals. Cryptocurrencies were up today. Bitcoin's up 2.5% for the week. Commodities. So the index was down 1.2%, largely due to crude oil, down 2.7%, down 5.4% for the week. Remember, it was up 6.3% last week. So it's given a lot of that gains back from last week. You know, natural gas, gasoline, copper down. Some of the ags were mixed here. And the precious metals, they were up though. Gold, silver, GDX really came roaring back. That was helped by the dollar. So the stocks outperformed. We need to see that build. Okay, it's possible we got a trade low there, but still need more evidence. As far as the bond market, nice sell-off in the 10-year, 30-year treasury yields for today and this week. Didn't help the markets yesterday, but it helped the markets today. Next, image number 8 shows the economic news calendar. As I said, Friday, the big thing is the non-farm job payroll report. Comes out 1 hour before the open at 8:30 8:30 Eastern. Next, jumping to the index charts. Here's the weekly view of the S&P. Again, as you know, yesterday it pulled right off that channel line. Obviously, nice recovery today. So no changes overall in this bigger chart. Next, chart 10, here's the daily view. Remember I talked about this. Yesterday's sell-off was scary, but we did not break symmetry. What do I mean by symmetry? Since the October low, the largest pullback has been 112 points. You need a pullback larger than 112 points to break symmetry. Once we get that, that'll likely set a high, and then we'll form a lower high. So we have to break 48.19 to break symmetry. Nice recovery today. Obviously, we have the MACD divergence that we're watching, but no break in symmetry. So the market could still go to new highs here. In fact, one of our preferred wave counts suggests that that is the likely probability. Again, here's an example of symmetry, guys. So let's take back earlier last year. Pull back here in May. Then you got another pullback there in June. Notice how they're roughly symmetrical. And then your next pullback in July into August was larger. So you had a break in symmetry there. That confirmed that you had a top in place. And then the next rally formed a lower high. So that's how symmetry works. But we did not break symmetry yesterday on the sell-off. Another thing, guys, and I had some discussion on the trading community. We have a lot of various moving averages on the chart, but let's focus on sort of the shorter ones. The 9 EMA, that's the magenta, the 5, the 20, even the 50. Everything is pointing up with strong, say, 45-degree angle slopes. Whenever you have that, markets don't just crash and continue to sell off. Okay, so if you're ever short, whenever you have a thing like this, the first good sell-off you get, like yesterday, you want to take a lot of profits because odds favor at least a pretty good rebound. I had a discussion with a friend of mine about that over the last week. He's been holding a bunch of July SPY puts. And I talked to him a few days ago. I said, hey, when we do get a good sell-off, make sure to take some good profits, take some off the table because we're not downtrending and odds favor that you get a big retracement. Well, he didn't take any profits yesterday and he gave most of that back today. So next. Image number 11, here's that symmetry diagram. Like I said, just a great little example here. You're uptrending, you measure the pullback. When you finally have the largest pullback, that confirms the end of that trend, then you form a lower high. Same works on the downside here. You're downtrending, lower highs, lower highs. Measure the depth, the strength of those rallies. Once you have a large rally larger, that sets a higher low. Next. Image number 12, here's the KISS Trend System. Again, remember, we were getting close to that smart trailing stop at 48.20. We did not hit it, so it is still intact. And the market wants to go up again, so be it. But so far, the system's done extremely well, going long on October 31st and still in place, raising those smart trailing stops up all along the way. You can see logical pullback from that DeMark 9. That's what these are, is DeMark. If you don't know what DeMark is, make sure to Google it. Chart 13, here's the 4 time frames. Again, we're holding the ATR in the daily, obviously. We're below the ATR in the other time frames. Now, I will say that that cycle support I mentioned on the 78-minute yesterday, that ended up producing a nice bounce. Next, chart 14, here's a half-day chart of the S&P. Again, nice pullback yesterday, recovering a bit. Now, on the next major correction, when we do finally put in a confirmed high, I am looking for this 4,600 area to be retested in the future, okay, on a good correction. Next, chart 15, here's the 60-minute chart. Again, nice recovery. We still have an open gap here to be aware of. Chart 16, here's a 30-minute chart with those fibs. So we retraced just over 61.8% of that down move. Again, could we still form a higher low? Yes, it's possible. But the further we go here, the odds favor a move to highs. We still have this open gap up here to fill. So if we get some more upside tomorrow, that would be a potential target. And chart 17, here's a 15-minute chart. Remember yesterday I showed how we came into this, the other day, that we came into this demand zone. So we came right to the demand zone, rallied off of it. And here's the fibs on here as well. So there you go on the S&P. Let's move on. Chart number 18, here's the Qs. So this is my preferred wave count on the Qs. It's also the same on the S&P, but it looks better on the Qs. This nested 1, 2, 1, 2. Again, you have your larger waves here, your major waves, then you have your smaller degree. That high in July was a wave 3, minor wave 3. So that whole correction in the fall was a minor wave 4, ABC 4. This new high, once we form a high, should theoretically be a minor wave 5 of major 3. Okay, so once that completes, then I'm looking for that bigger wave 4. Remember, this 4 consolidation would be to a bigger degree than this one. Okay, I'd expect it to at least come down to, say, the 4,600 area on the S&P. But then I would expect a new all-time high again in 5, and then that would complete it. Now, again, I wouldn't worry about the time structure here, but how I have it drawn, it would be funny if it occurred like that, because that would occur right around the election. You'd form a major high of that market. Then you'd have a major decline. Next, chart number 19, here's the daily Qs. Again, we did not break symmetry, as I said, just like on the S&P. Largest pullback in the uptrend from the October lows has been about 17.5 points. I didn't measure this, but clearly it's not. It has to break below 412 to break symmetry. We're still holding that tight uptrend. Next, image number 20, here's the 60-minute chart. This is a wave count on a smaller time frame. So we've had this in place for a couple weeks, guys. I didn't show it yesterday, and I should have, but this counts better as that 49.2585 high there as a wave 5 of 3. Okay, it counts better as that. And you can see the 3-wave pullback, that's all we've had. And that would suggest a corrective move and to be a wave 4. This suggests you get another move in a wave 5. Okay, it doesn't have to do that, but that's what I favor. Now, if we do get that move up there, then that'll be the time to be extremely cautious, because once that wave 5 ends, you're going to get a much larger correction. Okay. Next, chart number 21, here's the 30-minute chart. Again, shows this 3-wave pullback, ABC. There's some open gaps down here, demand zones. And again, if we were to sell off again, those would be targets. But for now, we could have completed this 3-wave ABC. And also, guys, from a wave structure, just some education. Wave A here is 5 waves. 1, 2, 3, 4, 5. The wave B is ABC 3 waves. So, and this is 5 waves down as well. Next, chart number 22, here's the KISS Trend System. Again, remember, it never even got close to its smart trailing stop. Should we get another high here, I'm expecting that smart trailing stop to jump up quite a bit. Remember, on the S&P, it's much tighter, so it'd be nice to see that tighten up. Excellent entry back here on October 31st. Next, chart number 23, here's the 4 time frames. Again, we're still holding that ATR in the daily. On the intraday time frames, the 130-minute, 78-minute, we had that support cycle yesterday, and lo and behold, that ended up being where price rallied off of. Now, again, it's below the ATR, it's resistance, right? So it's possible we could stall at those ATRs, but we did bounce off the support cycle. I really like these cycle indicators. They're really good for an Elliott wave type thing. Chart number 24, here's a 15-minute chart showing this gap, the potential ABC. And again, futures are up nicely in after hours, so wouldn't be surprised if we fill that gap tomorrow on a gap up if that futures hold. Next, chart number 25, here's the Russell IWM. I took off that upper trend line, redrew this. This could be forming a coil, perhaps, over time. You can see the price bounced right off that 50-day moving average and held it. And chart number 26, here's the bigger picture monthly view, shows you the long-term support and the resistance. That does it on the indexes, guys. Let's go and move on. Chart number 27, here's the VIX. Again, rallied up a little bit yesterday, pulled back. It's still inside its Bollinger Band, so it's not really saying anything. We get our main signals when it trades outside the Bollinger Bands. That's where we get our buy and sell signals. Next, chart number 28. Here's one of those indicators. This is one of the McClellan oscillators on the NYSI. Like I said, we have a big old divergence here. You can clearly see it. This indicator lagging now. But again, divergence isn't a sell signal. And, the S&P could easily go up to another high here. And I doubt this will take out its recent highs and erase that divergence. Unless we were just a melt up, which I don't see. So this is still something to be aware of over time. Next, following up on the market sectors, here's XLK Technology. Again, most of the sectors were up today. Jobber 30, here's transports. Again, bouncing near that 50-day moving average. Still a potential cup and handle look to it. If you were long, I think you could put a stop right at today's lows now. Jobber 31, here's the financials. Nice recovery today. And the area that got hit was the banks. You can see the banks sold off. Now they did bounce off their 50-day moving average. You can see why I have these major moving averages on the chart, like the 20 and 50. They are watched and price responds to them. Jobber 33, here's XLE Energy. Remember, it's been weakening here, and with crude oil selling off, not surprisingly. Plus, it did not take its downtrend line out. The question is now, can it form a higher low in this pattern? Jobber 34, here's oil services, same deal. It stalled at its downtrend channel line, pulling back. We'll see if it can form a higher low. We're going to need to probably see crude oil stabilize for that. Jobber 35, here's ExxonMobil, one of the long ideas. Again, was an excellent long idea back here over that 97 area over the doji, tight stop below. Like I said, I hope you took profits a couple days ago, pulling back some. But it's a very nice winning trade. Moving to the bond market, here's high yield corporate, finally trying to break out of this coil. Wouldn't be surprised if this breaks out to another high. We'll set up a MACD divergence on that, but likely this has been some fourth wave consolidation coil. Jobber 37, here's the S&P versus high yield corporate. Again, you still have the divergence between the two. Should high yield corporate go up to a new high, it will negate that divergence. Jobber 38, here's the 10-year treasury yield. Look at this sell-off. I had this nice channel. I've labeled that as an ABC move up. It didn't quite make it to its 38% fib, but I was labeling this as a three-wave corrective move. That was the correct way. And prices sold off strongly since. Helped the market today, obviously. Not yesterday, but today. Jobber 39, TLT. Remember, bonds, they move opposite to the rate, so nice move up in this. Was an excellent long opportunity on that trend line break. And Jobber 40, here's the 2-hour view. This is where I triggered. Get a nice clean channel on this 2-hour. I went long on the gap up out of the coil. I'm out of the channel, and I put my initial stop at that higher low, been raising it up. Quite honestly, could probably raise it again. It's hit a couple of my targets already. The first supply zone, the gap, etc. Great trade. And Jobber 41, here's the bigger picture view of TLT. Like I said, I'm still postulating this to work up maybe the rest of the year in some sort of ABC as a corrective move to this 5-wave downtrend. Next, moving into commodities, Jobber 42, DBC, big old sell-off. This could morph into some kind of like a bearish flag of some sort unless it recovers. Something to watch. Jobber 43, here's crude oil. Again, big old, sorry about that, it's trade station. That signals the end of the aftermarket hours at 8 p.m. So nice sell-off here. We'll see if it can form a higher low. Pretty ugly volume though. Jobber 44, natural gas, continues working lower. Jobber 45, copper, nice little pullback here, just kind of chopping around, quite honestly. Jobber 46, DBA, continues working higher. I went long this a couple weeks ago when it broke the pattern. I hold the swing trade in this. Why do I hold the swing trade? I like this weekly chart. You have a cup and handle potential here. Jobber 48, uranium. Remember, I've been bullish this long term. I was bullish again recently on this flag. I said you can put a stop right there at the dotted line. Nice move. Nice. Hope you caught it. Jobber 49, here's a 60-minute view. You could be trailing the stops up. Jobber 50, here's the bigger picture view. Like I said, one of my targets longer term is possibly up here in the 40s. I became bullish last year and of course in late 2020. Next, Jabber 51, CCJ, another, again, similar look to URA. Really nice moves here. Again, I've been bullish uranium for a long time, been pointing it out, so hopefully you guys have been following it. Jabber 52, Bitcoin, up a little bit, still well off those highs. Jabber 53, Coinbase, slightly up today, more of a kind of a doji candlestick there. Jabber 54, US dollar, said down about 0.5%. So far, price has been finding resistance to that 50% fib area. Jabber 55, gold, again, continues to hold on. The ratio is curling up here. We obviously want to see more strength. But again, we do have higher highs, higher lows, so we'll see. Jabber 56, silver. Again, it's overall in this bigger pattern. Jabber 57, silver on the monthly. Again, big 4-year coil. Be watching eventually when this puppy breaks out. Should be a huge swing trade. Jabber 58, GDX. So far for the week, it's up 3.4%. Still in the overall big coil here. Jabber 59, GDX on the daily. Nice recovery here. Again, it's got a lot of work to do, but nice recovery today. Here's the 60-minute view, or the 2-hour view. This coil finally kind of broke out of this coil. If you're long, I think you could put a stop essentially at yesterday's lows now. Following up on the trade ideas, again, Meta. Meta was up very nicely tonight on earnings, and I can't think of the other one now. But anyway, nice move. Oh, Amazon. Not showing those charts. These were long ideas, again, back in early January. Just continue to rock it up. Again, where do you want to put a stop? Just trail it up under the 9 EMA here, guys. It's really that simple at this point. Jabber 62, Microsoft. Now this one, if you were using the 9 EMA, you would have stopped out, but it was an excellent trade from that coil. Jabber 63, Google. Been weakening here. Jabber 64, BDTX. This has been one of the stars. This is it's a low price stock. I put it out on Monday. Resistance at 312, but excellent percentage move from 312 to 425. Hope you guys caught it. It was just a beautiful pattern. Excellent trade. Jabber 65, Alpine was a momentum play over 22. Puppy continues to run. I would just keep your stops really tight on it. Jabber 66, Hershey, this coil pattern. Pulled back yesterday, but recovered nicely today. Hopefully you didn't have your stop too tight there and you're still in it. I think now, though, you can move your stop up to today's lows. Got a nice little base here forming. Volume patterns look decent. Jabber 67, CX. This cup and handle continues to work higher, though, just kind of meandering up. Jabber 68, NVEI. It's been on the list. It's still valid. It needs to clear this 2550 area. Jabber 69, TSBX. Still a valid pattern if it can clear out of this resistance zone. I still own a little bit with a stop right there at the dotted line. Jabber 70. Here's a cheapie, NAS, low price stock. You got a bull flag here. Look at those volume patterns at over 165. Jabber 71, FDMT. Got basically like a 3-wave pullback here. Good volume pickup, one to watch for a long. Jabber 72, Clove, low price stock, tight coil though, one to watch. Jabber 73, ACET, kind of a big old rounded base, cup and handle look to it. Good volume patterns, getting low priced. I wasn't seeing a lot on my scans tonight, guys. I will look. I didn't have a lot of time to look for tons of ideas. I'll look for some and I'll post them on our trading community. All right, that'll do it. And the quick check on futures. Futures are up pretty nicely here. ES futures are up 25 points. NQ futures are up about 170. All right, have a wonderful evening. Thank you for all your support. on Breakpoint Trades. Thank you for your support on YouTube. And if you're not a subscriber of Breakpoint Trades, but you're a YouTube viewer, consider subscribing. You know, we have amazing information here and systems. I think you'll love it. You should check us out. Take care. Have a good evening.